Hello and welcome to the third episode of Salt Dash. This week we're going to be discussing two topics, one on income tax and one on sales tax. The first topic, income tax, relates to Washington B&O letter ruling. The taxpayer filed for employment tax with the state in 2007. They then determined that they didn't actually have to register and file and pay employment tax, so requested a letter ruling from the state to get a determination on their tax registration and reporting requirements for 2007 forward. They provided a statement of activities asserting that they had no employees in the state soliciting sales, meeting with customers, no third-party contractors soliciting sales, that purchases made by Washington residents were processed outside the state, and purchases made by Washington residents had to be picked up at a point outside the state. Based on that activity statement, the DOR issued a letter ruling stating that the taxpayer no longer had a tax registration or reporting requirement. 2013, the DOR comes knocking on their door again, requesting a statement of activities update. And now the taxpayer asserted that, well, we actually had people in the state going and soliciting sales, going to conferences. Some of the purchases were processed within the state, and the taxpayer, some of the product was delivered from a point in the state to a Washington customer. The biggest part that the DOR found here was that those statements were in conflict with the statements they had made in the 2008 letter ruling. So the DOR found that they actually had Nexus, calculated the BO tax from 2006 forward, assessed penalties and interest. Taxpayer then went and appealed, stating that they could have relied on that 2008 letter ruling. The ALJ at the hearing said, no, actually we agree with the DOR, you had Nexus. You could not rely on that letter ruling from 2008 because those facts in there were incorrect. And you could not rely on the statute of limitations because you actually weren't even filing or registered to file or pay taxes from 2007 forward. What's the takeaway from this? You should be very aware of your activities in any given state. When you're asked to report those activities, you should report the actual activities that are taking place, especially during a letter ruling, any other Nexus determination, or voluntary disclosure agreement, because those agreements will not be binding on the state if the facts provided were incorrect. Next topic is sales tax. This relates to a bill that was passed in the Arkansas House of Representatives regarding remote sellers, requiring them to inform their Arkansas customers that they owe a use tax on any products purchased. In addition, they're also required, the remote sellers, to file an annual report on sales to Arkansas purchasers. The bill is now moving to the Senate, but what's the takeaway from this? If this is enacted, sellers into Arkansas should be aware and take note of this legislation that they're going to be required to tell their Arkansas customers that they owe a use tax, that they're also going to have to file a report every year on the sellers' purchasers within the state of Arkansas. What do you think is going to happen? Most likely the remote sellers are going to collect and remit this use tax because it's going to be a lot simpler and less burdensome for them. Well, thank you for tuning into this week's Salt Dash, and always remember, salt matters.